What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Don't forget, everything is free on this channel. So, this is all for you guys. I provide videos for you guys for free. That's the benefit of being on this channel and a subscriber, hitting that bell. All I ask for you to do is be active and smash that like button. That's all I ask for. So that's the nice thing about being on this channel is some people have a Patreon account, some people have accounts charging people. I don't believe in that. I really don't. I think knowledge is power, and I want to share you my wisdom or things that I learned, and you can see what I'm doing or mistakes I'm making, so you don't make the same mistake as well. And the other thing is, I am hurting from my second shot of Moderna. I went live earlier today to discuss Moderna and Pfizer vaccine a little bit in detail with some of you guys on there. So that was fantastic. But let me show you about this stock that I bought right now. So this stock is CenturyLink, aka Lumen Technologies, that just changed. They yield a high dividend, 8.78%. Worth billions of dollars, and I'm going to show you real quick what they've done, and this is the reason why I bought them. I'm not going to show you how they've done against the S&P. They have not done well. But the revenue is right around in the $5 billion. So it's $5 billion industry. Board of Directors has distributed its dividend over time, and first of all, it's worth billions of dollars. You want to hear billions of dollars. When you're a company or you invest in a company, the word billions is pretty nice, okay? It's a telecommunications company. It does cloud services. It's just overall a really good stock. So it does, network services. I know it says that it's a member of the S&P 500 and Fortune 500, but if you compare it to the S&P, it's like, was good, but then it's not. So, it went down a little bit with the jaw. So I was going to tell you, I might as well show you that how it's done against the S&P. But this is what makes this stock attractive is its dividends. So sure, it's down price per share at 11.39, but it's very attractive, and I really enjoy it as a stock. It's a brand new stock that I added, and I'll show you why I added it on my M1 Finance dividend portfolio. This is not really a good stock for your traditional or Roth IRA, because I always explain in my philosophy is if I'm going to have a Roth IRA or traditional IRA, I want the dividends to go up and the price per share to go up, because you want to get your max buck. When you have a Roth IRA or traditional IRA, my honest opinion is you want that to increase your net value, okay? CenturyLink, if it's 11.39 for the rest of my life, it has increased its dividend. I am totally fine with that. I'm actually really happy. So because it's still there, I'm buying more shares, and it's just going to increase its dividend over time. That's like beautiful. I'm here for the Benjamins. I'm here for the dividends. Stocks like AT&T, Pfizer, CenturyLink, they're not the best stocks for a traditional or Roth IRA. This is a stock that gives you nice Benjamins, nice money. So let me show you its dividend history real quick. So originally it took a nosedive at 54 cents per share. It's right around 25 cents per share quarterly. One thing that I will say is 2 QYLDs, okay, it's $11. QYLD is about $22, okay. That's one thing to address. So I have QYLD, and QYLD distributes a nice dividend. And the thing is, okay, QYLD is about 20, 30. This is still, 2 QYLDs are nice, okay? But eventually this thing is going to get bigger. So for $11 a share, okay, with a quarterly dividend, I can get a decent amount of shares, okay, with this stock. So I'm going to show you what I'm going to do with these guys and see what I can do tomorrow. But I like what I see with this stock, and I'm adding it to my M1 Finance dividend portfolio because 25 cents a share for $11. Okay, the yield's not too bad, and it's pretty consistent. All right, it's a member of the S&P. Now, it hasn't beaten the S&P, but usually the good businesses will adapt. And if I don't like what I see, that's fine. I'll sell it and get something else. But right now, this is what I really like about QYLD. Okay, for 25 cents, $11 gets me a quarterly dividend of 25 cents. That's a deal, if you ask me. I can almost even, if I wanted to, put it in my E-Trade dividend portfolio and just go from there. But I like what I see because if I have it at a small percentage, I can buy, more other shares, and I can buy more shares of this. So, imagine if I put in 10. So if I have 11 shares, okay, now let's just say 15 times 0.25. I get $3.75. Okay, now you see where I'm going. I could almost buy, okay, $3.75, 369.12. 369.12. I'm buying another one. Okay, if I have 15 shares of that, 369.12. Again, do you see where I'm going? It kicks in, and you can buy more shares, and the compound interest will kick in with a quarterly dividend. So that's one thing to look into, CenturyLink. Okay, that's what's very nice about CenturyLink. It's not a lot. It's not a lot. But let me know what you think of this video of CenturyLink and this stock, because I'm very interested to see what you have to say in that. So thank you again for being very active on that channel, and I will show you what I'm doing with my M1 Finance dividend portfolio with CenturyLink. I'm very excited. This company is worth billions of dollars. I think this is a strategic position so that I can get more shares in this stock, more shares in my other stocks, and get the ball rolling. So let me know what you think. Should I put it on my E-Trade one or M1 Finance account? What should I do? So I'm pretty sure I'm going to keep it on my M1 Finance account because it's down and I can get more shares. I can let the compound interest kick in. I think this is a strategic move to make a change on my dividend portfolio and make it a lot stronger, make it more efficient, and distribute quarterly dividends so I can buy more shares. So let me know what you think of this strategy. I kind of like to compare it against QYLD. QYLD, it distributes pretty nice dividend, in the 20s. It's just very interesting. So thank you again, and have a good one.